good morning everyone. I'm recording from Chennai today. So yes, this is not my house or office. I had to travel here because of my wife having some family related work to get done, and so I've moved for the day. Anyway, a lot happened this week. The market was in this tight range for almost 3 to 4 weeks, I think since the 23rd of December, when we hit 17,770 odd, I think. And since then, we've tried many attempts to go back above, 18,150, come back down, gone back above again, and then come back down a third time. When we came back a third time on Thursday, expiry day, I thought probably we could make a triple bottom here and turn around, but the news flow around the Adani Group, which was already there on Thursday. So it's like, okay, Thursday I thought, okay, maybe it's discounted in one day. But by Friday, the response and reaction was far worse. And so it broke that level by 300 points, and people are starting to question, okay, then was it worth getting bullish at 17,700? I mean, we've only fallen below that by 200-300 points. The whole world did not turn upside down. And there's this belief, if a level breaks means you're supposed to turn bearish. So when I was on, on television yesterday, some of you may have seen the CNBC interviews talking about buying low and selling high. And it's such a standard feature. I mean, we've all read that buy when there is blood on the streets. Well, there was blood on the streets yesterday. Did you buy or did you sell? For a lot of people, yesterday would be a stop loss day. In fact, partly why I think that there was all-round selling yesterday in the market, it is because people who lost money, expiry, what usually happens, and this used to happen when there were margin books, okay, there were huge mid-cap margin books before SEBI came in and said, no, you can't, brokers can't do this, it needs to be done through NBFCs, and sort of the margin books got significantly reduced. But even then, whenever you have a lot of book, you have a big book, and then there are losses, what happens is, right after things like expiry or when, market has fallen quite a bit, people have to pay that up, right? So 1 or 2 days after that, the next 2 days are usually critical because that's when all the selling to pay for your losses happens. So this is sort of what you probably saw on Friday. The Adani stocks not only fell much more because people who are holding on to a losing position have to square up. And then once they are squared up, they have to pay for those losses, which means they have to sell from their DP accounts, which means stocks across the board get sold to pay for those losses. And which is why would something happening in the Adani Group cause Reliance Industries to fall or HDFC Bank to fall? So if you don't understand why that is happening, why is it across the board? It's not that there's been a contagion effect. There's no case against the Adani Group yet. People are talking about Heidelberg wrote something, matlab kal subah Adani jail mein ja raha hai. That is how the market is responding. So you have to differentiate between stupidity and reality. On Twitter, of course, people are arguing back, and I'm sure after this video, they will also argue back saying, no, you haven't seen, this is what they have done. अरे सबको मालूम है, 2 साल से हम लोग यही बात कर रहे हैं कि उसका पी बहुत ज़्यादा है, डेट इक्विटी ज़्यादा है. गांव-गांव के फंडामेंटल और टेक्निकल एनालिस्ट को ये बात मालूम है, ये बात डिस्कस हो चुकी है. मैंने भी अडानी के 5-6 चार्ट डाले थे कि उनके 5th वेव, ये पूरे राइज का जो पिछले 2 साल का राइज है, उसका 5th वेव दिख रहा है. When I was still being bearish on the market, so I said चलो 5th वेव दिख रहा है, शायद नीचे आएगा. जब दिसंबर में मार्केट पीक हुआ और गिर रहा था, अडानी एंटरप्राइजेस 20 तारीख तक तो ऑल टाइम हाई मार रहा था, तो मार्केट गिरने के साथ भी नहीं गिर रहा था. It's only after the 20th of January that it suddenly started to fall, even when the market was flat, except for the last 3 days. If you see, the group shares have been falling for far longer than the market, over the last 1 to 2 months. So this news has only come after the entire decline. Why didn't it come earlier? Why wasn't it the cause? Why is it the effect? And that is where you have to understand that news is usually late. Okay, and by the time it comes, the sentiment is already very bad and negative. And that's usually not the start of something, it's the end of something. Now, unless you can say that this news means that you've already investigated something wrong going on in the background. So it was more than a year back, SEBI had come up with, okay, is there a price manipulation? And they didn't find anything, or there's no news flow after that. Price dropped 20-30%, and then Adani Enterprises went up 2.5 times since then. Now again, there's a news flow. Now this time with the international report saying something is wrong. I'm not saying whether something is wrong or not. I'm just saying that where are we in the stage of that process? If a stock has gone up a lot, we sense, okay, maybe something is wrong. It might not be the case. Okay, and it might also, maybe valuations are too high, but there may not be a fraud case. So there are a lot of judgment going on. I'm not sure which one it is. I can of course say that yes, valuation is high, which is the obvious, right? PE 300, 500, no stock has been there. Every stock that has been there doesn't give returns on a 10-year basis. There are enough global studies about this. So I don't have to state the obvious, and we didn't need Hindenburg to come and tell us the obvious. So that is not the important part. The important part is whether there's something malicious happening. And by whom? Is it us? Is it them? And will it get proven in Indian courts? And so if it's not today and there's not enough proof, then there's no story today. But definitely it damages sentiment. So that I don't deny. Okay, in the near term, it damages sentiment. But should it result in an across-the-board equity market sell-off? So then I take examples. You can look at what happened with the Adani Group. All my reports are published and archived after 2013, fortunately, because before that I was not doing it. My site was a plain HTML one-pager for 13 years. I just used to rewrite it, so there was never any history. And my bosses used to say, I want to justify what you just said. How do I show it to anyone? But finally, I made it a CMS website. Now, all the history is there. So everything I've written about PSU banks, about the ADAC stocks and all the wave counts, they're all there, all published. And they were all looking negative even while the Nifty was going up in 17, 18. And so I thought, if all this is looking so bad, maybe the Nifty should come down. The fact is, Nifty kept going up and all this still came down. So we relate too much. Even me, I've made that mistake. We relate too much that if something bad is happening in certain sectors, everything should come down. Which is how we've seen the bubbles pop, right? In India, we've had the Harshad Mehta bubble. When it peaked, everything fell. You had the Y2K bubble. When it peaked, everything fell. You had the GFC crisis, 2008 top. When it peaked, everything fell. So last 1 year, I would have thought the same. It looked like the US has peaked on peak valuation, FANG stocks, everything crashing apart. Everything should have crashed. 1 year later, everything has not crashed. A lot of stocks holding up. So which is why I was not changing my view till April. Till the Nifty had a triple top along that line. And then I said, okay, if it's a triple top, let me at least respect that. And then I turned to bearish because Fed is banging the table. So some of this I'm going to also be discussing in WWIC. But since there's still time, I thought I'll do this video for YouTube. Specifically because of what has happened on the Adani story in terms of sentimental impact. And so I wanted to highlight what I'm thinking about that. I'm not saying what is right or wrong. I'm just talking about market behavior with news and the history of how these things have played out so that you get a context of where you are. So if a certain group breaks down or a certain sector breaks down, does it mean the whole market falls apart? The answer is no. What happened yesterday could be purely margin-based selling. Usually it lasts for 1 day, maximum 2 days. The effect should be over by Monday if it is purely margin-based story, what happened here. So the turnaround in global markets that I've been writing about has already happened. Except for India, all other markets have turned. For some reason, India was not, and maybe this was a pending story because, like I said, Adani was falling all through since December till now, even when market was flat. Maybe that was the thing not to overlook. Maybe I overlooked it because I was looking at other things picking up. Auto stocks were picking up. IT stocks have picked up. They didn't fall. IT, metals, auto, all were outperforming yesterday, even in a crashing market. So that doesn't give me a sense that this is like a dead end. Of course, Reliance breaking key levels was one, but it's 1 day break. It's not broken levels which change a view. It's actually the RSI has gone below 30. So like there are a dozen stocks where the RSI has gone below 30, more than a dozen. I think around 15 to 20 stocks in the Nifty 50 and around 76 stocks in the FNO basket. Okay, so that's around out of 190 stocks, 70 would be around 40% or so of these stocks with RSI is sub 30. So they're all getting oversold and there's a big caps. Names like Reliance, SBI, HDFC, Bajaj, Twins, Kotak Bank, so many other cement. There is Shri Cement, I think, is there. Z is there. Many. It's like a whole bunch of stocks that really got low RSI readings yesterday. So when this happens on a combined basis, especially for large caps, you typically get into an oversold zone where you'll be bottom out anywhere between 25 to 28 RSI. Usually these things happen. So which is why I'm saying give it a day. With such a low reading, is the breakdown yesterday in a single stock really a trend reversal? So I would think probably not right now. I would say it's too early and we are just reacting to the break of 17,700 and which is actually 61% retracement, right? If we actually see the entire rise from the October bottom, 650 or 750, all the way up to the top end was 18,890 or something. 61% comes to around 17,560. 66% is 17,475. That's the level I gave on CNBC. So that range, within that range, somewhere you will typically expect maybe a possible bottom. So we try and search for that. But now let me go back to the Adani discussion, because that's the key. And in terms of sentiment, what does it really mean? Nothing much. And I'm saying nothing much. So here's a story. What is the closest parallel we can draw with what is happening here? And I'll tell you, it's the obvious. It's the Reliance Group, right? We always make this Adani Reliance comparison. And the reason is not just the current state of affairs, but if you actually see the entire history, for those who don't know, young guys who've not been around, heard stories but don't know everything. What I remember, 1980s, Reliance Industries was growing, exponentially on the back of, adding a lot of capacity. How was it getting those contracts? How was it getting things passed? People used to say, well, they are well connected with the existing government. Then it was Congress, so they said, oh, that's why laws change, this happens, that happens in their favor. They grew. But of course, they got into right sectors that needed growth in India. We didn't have a petroleum industry, and so they were, of course, having the first mover advantage. But surely, if you say they got help from the existing government in power, you can draw a parallel with the Adani Group that is getting help from the current existing government in power. Okay, fine, you have a parallel. The further parallel is that whenever you invest in an infra, oil and gas, these kind of core economic sectors, there's always debt and equity. It's never like 100% equity. It's not like Infosys, right? So all infra projects always 3:1 debt equity, 4:1 debt equity. So while Reliance grew also, they had a lot of debt. It was a growth company. They could afford at higher interest rates. But once you become large, see, your gameplay going from 0 to 100 or 1,000 in terms of size of your company, you may get help, you may have had contacts, all that is fine. But after you've reached that scale, it's no more going to work like that. You have to survive. So that's when it comes down to survival of the fittest. So this is my view. You can agree, disagree, that's fine. But survival of the fittest for the Reliance Group, what I have seen from the 1990s, when a lot of analysts remained in doubt about the group, they thought the balance sheet was rigged, they thought it will fall. This is reality. I had a IIM Calcutta analyst working with me at Sharekhan who said, nobody can study the balance sheet of Reliance Industries. This is the kind of view people have had historically on it. And the reason is because, yes, they've done a lot of accounting to save on taxes. But more than that, when you look back, from the peak of the 94 business cycle in India, where all these companies in infra and realty, metals, all of them went through a huge downturn. Many mid-caps went out of business. During that phase, Reliance survived. And so how did they survive? So then you see, once they became very, very large, it becomes all about cost of capital. This is basic MBA finance. Okay, what is cost of capital? You have cost of debt, and you have cost of equity. So when you see the history, what they ended up doing is that whenever markets were high, that is equity markets were high, they've always issued more equity, which is the right thing to do, right? You issued more equity, which means your cost of equity came down. You bought equity at very, very low prices, which means high price in stock, but you're raising equity at a high price, so therefore your cost of equity is low. When equity markets were down, they raised debt at the lowest levels. They were the first people in the mid 1990s to issue perpetual debt bonds outside of India at an interest rate that nobody in India, no corporate in India had ever had. So those kind of moves, and then they had done many of these IPOs in different businesses, RPPL, RPL. They had two Reliance Petro issues, both of which were remerged into Reliance Industries when the stock price fell. So again, lowering the cost of equity for Reliance Industries. So you look at all this, people can call this all this manipulation, but when you look at it purely from a fundamental point of view, what they were doing is reducing cost of equity, reducing cost of debt, which is cost of capital coming down for a large business, survival. And that is the real game they've been in. If you want to invest in businesses which are at scale, like they're doing with Reliance Communications and the entire Jio business, these are scale business that they are running right across the country, millions of users. You want to be in telecom, you want to be in broadband. whatever business you want to be at scale, you need to invest equity, debt, and keep the cost of capital down. That is the real game. Okay, so otherwise you can't run economies of scale, right? An operation and then beat competitors at doing so. So if you understood that, now you look at the parallel. You have a group which is growing with the help of the government. Okay, sure. But at the end, once they have become very big, they have got to grow on their own. They've got to bring down the cost of capital. This is survival of the fittest. And that is what the Adani Group is really trying to do. The fight back is, of course, competition. So competition will always fight back. They will try to point fingers. You are seeing some things happen. Internationally, you have someone coming out and saying, oh, these guys are doing something wrong. Are valuations high? Yes. Are they doing something wrong? Needs to be proven in a court of law. Okay, so whether it is, it isn't, there are a lot of operations like that which have been blamed on, the other groups also, like Reliance also. They used to have many small companies. I think in the early 1990s, many small companies used to get created. Then they used to be closed when you were buying stock. You can come up with all theories, something happened, but basically all that is over. That was history. It's gone, finished. Nobody's there. Manipulations, they can be blamed on manipulators. Is every manipulated stock gone to zero? Then Z Tele would still not be around, right? Ketan Parekh got involved in Z among many other companies. Z is still here. Okay, the stock crashed 90% after the Y2K. It didn't disappear. KP disappeared. So we try to put too much blame on one thing or the other. There's one more big difference between Reliance and the Adani Group, and that is the Reliance Industries actually always had a lot of public shareholding, so they didn't have low floating stock. Therefore, their valuations have gone up and down, but they've not gone extreme. They also had complaints against them that they don't pay dividend, they don't give bonus shares. Eventually, they did pay dividends, and eventually they did give bonus shares after a decade or 2 decades. But they did finally. But it took them time because they had to set course many things right, and they needed capital to keep growing. So they were not, using that capital to do those things, and maybe they were setting other things right first. Same kind of blame is now being made to Adani. They don't pay dividends. They are not doing this. They're not doing that. Will they be able to? It's again survival of the fittest game. So they are raising capital this year because they need to bring down cost of capital. So they're back in that big game. They've become large. Now, if they don't manage cost of capital, which is both equity and debt, that's where then survival becomes an issue. So that's something they're going to definitely attempt to do, and they're attempting to do. Whether it turns out right for them or not, we'll know. But valuations may be today a function of low floating stock. So that becomes again another big difference. Who owns the equity? Public for Reliance Industries. Who owns most of the equity here? You have a lot of international funds that have ownership. Now you may again come up with a conspiracy. It's through this route, that route, Mauritius, EAO. I don't know about all that. It may exist, may not exist. There may be something right, wrong. Who knows? Still investigated. But the point is, floating stock is low, and therefore moving up the price excessively, or if even little demand comes in, prices go up a lot, was a natural effect of low floating stock, which was not true with Reliance because they always issued equity to public to garner money, and therefore public shareholding was always high in the case of Reliance Industries. So so these are the prime differences. So there are a couple of differences in how they operated at the end, but a lot of similarities in terms of how they grew, how they became big, and how they need to survive. Okay, and so that's the reason to give you that history, is that you're able to make a comparison as to what is happening here today, what has already happened, how analysts thought about Reliance 15 years ago. They didn't die. Today the people are thinking the same way about Adani. That doesn't mean they won't survive. Okay, that's what I'm trying to say. There may be an issue today. Maybe the stock gets dumped more than what it has right now. Maybe valuations do correct. But that doesn't mean it may or may not become a survival issue. Would I buy at these valuations? It's an individual call. Personally, I have not. So that's my disclaimer. I've never owned it. I don't own it right now. I have tried buying puts in November and December. Some of them didn't work because December it went up till the end of the month. Nifty was down. So my Nifty was paying off and Adani Enterprises puts were not. Now they are falling, and then the market fell much less. So then therefore that disparity, you have to have focus eyes on that. No, I want to only stay short on this group based on the technical pattern, forget the Nifty. Then you would have probably managed to do it. If there are people who've done it, I'm sure out there are always some people who've been smart. So let's not deny that. I wasn't smart enough for Adani because my process is top down. It's like Nifty in stocks. So I thought when Nifty is falling, Adani should have fallen. It didn't. Now Adani is falling. Nifty didn't fall that much initially, only the last 2 days. So for me, that was not a trade. But that brings me back to what is happening in the market, which is that despite all of this, the market's got to do its own thing. I think the impact of Adani on the market stocks because of the leverage and trading may be over in one day post expiry, loss booking, that will end. After that, we need to see what happens in the next 3 days. And next 3 days, we are entering into Union Budget 2023. Start of Jan, I thought maybe market is strong. It will rally to the end of the month with the world and we'll peak near budget. Now the opposite story. My story is 180 degrees changed. Because usually when you get a dip ahead of the budget or when you get a consolidation ahead of the budget, I have seen 9 out of 10 times it will reverse to the other side. So now you have an opposite situation. Instead of market going up into the budget and then peaking out, you have a market which is crashing into the budget and may bottom out. At least that's what happened in 2019, 20, 16, many different years where that happened. Some of them were small corrections, some were deeper. 2016 was a 1-year fall in the market going on. 2021 was just a 1 week or 10 days fall before the budget, and then it reversed 1 day before the budget and kept going up to a new high. So different situations, each one is not exactly the same. But like I said, post and pre-budget behavior is often opposed to each other, and that's where sentiment comes into a play. And the other last reason is that because this budget is going to be the final one before the elections kick in next year, this is, as some people are citing, a final opportunity for the government to try and do a little more than what they usually do, which people were expecting last year also because collections were good. This year tax collections are even better because inflation's been high, so GST collections are high because prices have moved up. All those gains are there. So when I hear people talking about tax increases, I don't understand why you need to raise taxes when your tax collections are good. So this is actually a year where you can do much more in terms of tax reform. That is more important. And if tax reform comes in on the retail or middle class side, that could also be very positive. So there are a lot of things people are trying to anticipate. We'll see what happens. But net you would expect some positivity. Even last year's budget was good, but you had Russia happening. So they were spending more. In terms of my expectation was they spend more on capex, and they did. But markets went down because of global issues, but eventually capital goods sector did well at the end of the year. So similarly this year also, I think they will continue to try and push growth, but might do a lot more, try to do a lot more ahead of elections 2024. Let's see if that happens, and if the market is depressed ahead of such possibilities and they do end up delivering a budget which is far better than expected, I would think a post-budget rally is coming. So that is my end conclusion of all that has happened over here. Despite the noise, the view is only gone wrong for this month, but turned on its head 180 degrees. That's how it is working for me. And I leave you with a lot of thoughts about the group. I'm sure the comments are going to be filled with Adani ye, Adani wo, but without having analyzed how other groups that went down had an impact on the market, and others that have survived, how they've really done it, and what is the way ahead for the Adani Group. So those are the things you need to think about. This is not a micro game, it's a macro game. Not everybody that plays it loses. Some people get caught. You had survival of the Sahara Group for more than a decade. Even after all the NBFCs fell apart in the 1990s, they were a survivor. But eventually time caught up with them. So that also happens. Sometimes you survive for much longer than people thought, and then something goes wrong. Each case is different. But right now, all we have is only news, and therefore we have to treat the news as news. You cannot treat it as fact. That's all I'm trying to say. Thank you.